Alrighty. All right, Wednesday, December 24th, 8:14. Little late start today. It is an early close, so we are going to close early, as they say. Or as I say. I don't think they fucking say anything. I say. So we are going to close early. I think, I don't know what time, honestly. I know I'm going to be done briefly after the open. I mean, I'm going to head out and do my thing this morning. So, and nothing's really moving around much at all. We have some obvious high volume stocks from yesterday. All the usual components, NVIDIA, Tesla. Tesla continues to just bang out the options volume on, had a bad day yesterday for Tesla. But overall, again, just at the option leaders again. And these were all the high volume stocks: Broadcom, Apple, Microsoft, and Amazon. Most volatile, I'm going to start bringing these. I actually like this dashboard. I never even knew it was available. I mean, I've been using this platform for what? I don't know. It's been around a long time. I think about 10 years. I have to go and look of when I signed up. Might not be 10 years, but I didn't even know it was there. And then your losers and gainers. This Starfighter, this F-Jet, this is a new issue. So I'm not really surprised that it actually sold off. I don't even know what they do. I honestly don't care. I really haven't bought any. I haven't done anything with it. I always like to wait on these new issues until they get past that cooling area. And I like options to start trading on it before I start doing anything, because I think it adds a lot to liquidity. And as far as a lot of these other ones as well, these are all garbage meme stocks, to be honest. So what I had done in my spare time, because I don't have much going on in my own life these days, I created a stock screener, and I kind of like it. And I'm not filtering on anything extravagant here, like profitability or income, cash flow. It's really about market cap, right? I want to trade stocks, and I want to stay involved with underlying stocks and underlyings that have over a $50 billion market cap, because I want to be in a space where there's some adequate liquidity. Because I find when you get involved with some of the smaller market cap stocks, specifically the ones 50 billion and less, it's about 10 billion to 50. Those stocks tend to get very manipulated, and I kind of stay away from them. And I think the problem is, and not to say that look, there's people all over the place going to say, everything's manipulated. Well, of course it is. Of course it is, right? It's the American way, right? If you're not cheating, you're not trying. So, there's guardrails, at least, to some extent. So, look, if you lose faith, if I lose faith in the whole system here, as much as I know, look, I know it's corrupt. I know that it's insider trading. I know all that stuff. I know it all. But I really, honestly, on the other side of it, I do believe that our markets are so incredibly liquid and so incredibly efficient that I don't really think there's much advantage anymore that people have. Now, look, there's obviously that 1% or 2% of the people that are out there, right? We have Congress, all this other stuff. I'm just talking about as far as a flat game here. For the most part, they're extremely efficient. I mean, and there's no other place in the world where you're going to be able to do what we do here as some jackass, right, sitting in his back office, like I have done for over 30 years. I would never be able to do this in any other country in the world with any other markets. So, as flawed as it is, and look, it is, and I'll admit that, and I'm well aware of it, And as much as it has its shortcomings, there's nowhere else that you're going to be able to do this in the entire world. So, deal with it. It's what we have, and just work within the confines of the tools you are provided. So anyway, that is kind of my watch list. Now, that's not to say that I'm going to trade all of these, but when things are light, and like they are, and I can't really get any juice in anything of any consequence here, when I still see all the same kind of stuff here on this volatility list, I can only build so many positions in HUD 8. I can only build so many positions in, SLV and GDXJ and GDX and gold. And and most of the stocks on this list are all miners, right? We already talked about Oracle until we're ready to puke, right? I could puke SQL right now. I have so much Oracle. I don't need any more. iBit, I don't even know why this is even on the list. I wish I could filter it out. So I'm just trying to find some alternative lists to, provide trades. Because quite honestly, the stuff that's on here right now, at least in my opinion, and as far as how I trade, it kind of sucks. So that's what I had done yesterday. And, it was funny that a lot of the stocks that were actually on here are many of the ones that I've already traded anyway. But I wouldn't have looked at them if I didn't look at this list. And so what I had done is look, I'm going to age myself. And reality of it is look, I'm always going to look at PE. I was a registered stockbroker from back 1989, I think 89 to 96. I think 89 and 96. About 6 or 7 years. Fully licensed, registered representative, as they call it. They didn't call you a stockbroker. They were a registered representative. I was nothing but a sales shill for the company I was working for. Let's face it, that's all those people are. But anyway, needless to say that we were pounded into that. It's pounded into my head. PE. So I'm always going to look at PE, whether I trade on and then PE is not going to make me not take a trade or take a trade. So, but the reason I'm looking at PE right now is because when I look at these lists, and I know price earnings can get manipulated. When I look at these lists and I look at all the companies that are on here and their price to earnings, they're all fucking off the charts, right? And I knew this. I know this already going in. I mean, this isn't new, but it's something new when you actually look at it real time and list some of the stuff that, where it's trading. And there is some enormous PEs running out there. But there's some companies that are running at high PEs that I would say most likely can't sustain it. Like an Intel, I'm not sure that they're going to be able to sustain that. But anyway, I'm looking at the other side. I'm looking at the low end and saying to myself, look, we've been in this market, this trading market, where we haven't even looked at valuations for probably since 2020 and before. And then since that time, the market has just gone crazy. Kind of think that 2026 might be a little different. And the reason I'm thinking that is I don't think I'm the only one. I think the reason I'm thinking that is because I think more and more even institutions and stuff like that are starting to look, because again, we've had so many big gains in these stocks that have these big valuations that at some point those shrink, those valuations get slammed and they get hit. And we saw that with the AI stocks, right? And I don't know if that happens. Maybe it doesn't happen and none of those valuations shrink, but maybe they don't grow. And if that valuation doesn't grow, then those stocks really aren't going to have great returns. And so really what I'm looking at here is I'm looking at maybe starting to buy some of the dogs that are out there that have, low PE, low price earnings. They're bigger companies, $50 billion and more. They pay dividends. So I'm likely to do it in an IRA or something like that. I'm not going to do it in a regular account, regular taxable account, because I don't want to put myself under. I don't want to put myself under any kind of tax situation, and I'm not a tax advisor. I just don't like paying tax. And then I was looking at stuff that I wouldn't even normally even think of owning. Now, I've traded a lot of these stocks that are on this list. I've traded Ford. I actually own some Verizon. I used to own AT&T for God knows how long. I don't know if I could really stomach myself buying any of that. But every stock that's on this list, outside of maybe a couple that I can even see, I don't think I've ever traded Cigna. I don't think I've ever traded Enterprise. But most of these others, I've traded them at one time or another. So the area or the sector that I'm looking to stick to is both finance, transportation, and healthcare. Those are three areas because they've actually been a bit weak, and so that's really it. I mean, I just wanted to kind of throw that out there because. We are going to be starting a new year in about a week. And, I'm always looking for something or like some kind of theme to have for the year. Like last year, my theme was to build positions in ETFs. That was one of my themes last year, was to build positions in and conservative ETFs. And I'm talking about safe money here, folks. I'm not talking about stuff that I talk about here every day, like, trading options and this type of stuff. That's all well good. This is like safe money. This is like where I'm going to kind of start dumping $1,000, $2,000, maybe $3,000 a month in. And it's kind of like where do my gains, if I'm making money on my other trades, where's that money going to go? It's got to land somewhere. I'm not going to have it just sit in cash. So I'm actually looking at some of these. So I guess stay tuned, and then if you have if you have TradingView and you have the stock screener, give it a shot with this screener. I think you'll like the companies that are on this list. It looks like there's 234, so it's actually less than what's in the S&P 500. And if you look for specific sectors, you're going to find that you're probably going to wean this down. And I think I can, yeah. So if I go to sectors here and I go to finance, I go to health services, health technology, and transportation. That brings us down to 81 stocks. All right? And preferably stick to the ones with the best market valuations, right? I'm not going to go and jump in this sector with some of these that are at the bottom of the list, like Rocket and Dash, DoorDash, like too much, to me, too thin up here, right? A lot of heavy valuation. Eli Lilly, I might stay away from that one only because it's just been a nut house. That thing has just been a screamer. But some of these other ones, like I like Merck here. I saw Merck on the list. I like this here. I've already owned some of that, but I do like that here. At a 13 valuation, they do have some stuff in the pipeline. I think the drug companies are actually going to be. I think the drug companies are going to have a good year next year. And then regardless of what your political leanings are, look, they all buddied up to El Presidente, and and I think they did that for good reason because they want good press, and I think with good press for them comes good times. So say whatever you want, but that is what happened, and so try to use it to your advantage, and that's what I think about it, and I'm going to try and take advantage of it. I also like Pfizer. Pfizer's been a piece of shit for a long time. I think it's been at this $25 range for freaking ever, and we can look at a couple of them. The other one that I do like here is I like Chubb. And then the nice thing about all these stocks is they all have a decent amount of options that are offered that you can, you don't have to just buy stock. You can do options. And I will likely, that's how I will begin, getting involved with these, is I will start doing options, and preferably if the volatility is decent, or as I might do stock replacement stuff. And so, the things you're going to probably see is stuff like Merck. And even though the volatility kind of sucks in here, rather than go and buy shares, I just find it be more efficient to just sell some puts. And they are going to be deep and wide puts, put spreads. And they're nothing more than just stock replacement. And so that's what you're going to likely see. Now, again, I realize the volatility kind of sucks and you probably shouldn't do that. But I'm doing this because it's capital, right? I don't want to use that much capital, and I want to get long. And I don't care if I get assigned. It would actually be, I'd be fine getting assigned. So with Merck, I'd be fine getting assigned at $95. Because I get assigned at $95, then I would sell 100 calls against it, right? And I don't want to talk about, but I would do the wheel. And we've been doing the wheel long before they used to call it the wheel. We didn't have a name for it back in the day. We just sold puts and put calls. There wasn't a name for it. Amazing what social media does. Social media packaged it and wrapped it into a thing that now a bunch of shysters are out soliciting, the wheel theory. Dude, shut up. Go away. You read it in a book somewhere, and now you're selling, some Discord. Go away. Please go away. So anyway, that's kind of stuff you can look for. As far as everything else, let's switch gears a little bit now. And I just wanted to throw that out there because I'm going to be starting to look at that list. So this morning, nothing's really, I guess I got logged out. Yeah, I got logged out. So nothing's really moving. You got gold's basically flat. Silver, basically flat, today. I mean, these things have actually been going gangbusters. I think the move of the day yesterday was in bonds. We talked about bonds early in the morning, and I had mentioned that, look, bonds looked like they were at a really interesting inflection point here where they were either going to carry along here and continue to rise, right? And they fell off. I mean, this is a big move in bonds, but surprisingly, they bought them down here, and they bought them pretty hard. I mean, we fell off the cliff. That number came out. I think that whatever it was, the GDP number came out, and I think it spooked the markets because it spooked the bond market because. They were like, well, hey, if we're growing at whatever it is, 4%, and then on whatever it is, the real GDP, X inflation, they have there's all kinds of, basically it was 4.3, and then there was a whole bunch of other stuff that they, without inflation, whatever. But without inflation, it was something like 8 point something. And, God forbid, we can't have that. We can't grow that fast. Oh, my God, that's a disaster for some reason. I don't know why. I could never wrap my head around that. I took a lot of economics classes. I'm actually a 9-credit shy economics major, believe it or not. And I could never understand the whole rationale behind we're growing at such and such, so that means we have to cut interest rates because you can't grow that fast because it makes inflation. I'm like thinking, no, it doesn't. doesn't always do that, right? There's been times when we've had humongous growth and we haven't had inflation. And like inflation isn't overall bad unless it's like it was a couple of years ago, a year and a half ago. That was bad inflation because growth wasn't keeping up with it. But if growth is 8% and we have 2% inflation, who gives a fuck? Pedal to the metal, man, right? You can't ask for anything better than that, right? Pump it up and keep cutting rates until it fucking blows up. Like, I can never understand that, folks. I'm sorry. I come from it at a different angle, and, you know, it just proves to me that all this shit and all this bullshit with the Federal Reserve and all this, it's all fucking politics. You know, it's all who they want to succeed. And it's sad. It's sad, and because everybody, you know, who pays the price is we do. So anyway, with that being said, bonds bounced really, really significantly yesterday, and they've almost gotten back to this line. And to me, this is actually pretty important. And it may not play out today per se because it's going to be a light day. I don't even think what we do. We barely did 50,000 cars on the ES, so there's like nobody home today. But this line is definitely going to be a big factor because it kind of busted this. And, you know, the fact that we actually broke that, rallied back, and now are back up here, it's really important for this thing to continue up here in this trend. We'll see. We'll see because it's important for me because as I said, I like the short end of the curve. And we saw the same type of movement on that end of the curve as we did the long end. And now there's a lot of people who are trading stocks. We're going, who gives a fuck about the bond market? It's all about the bond market. It is all about the bond market because, you know, if bond yields begin to rise, it's going to put a significant strain on the stock market. And it is, and don't think it will. It will because you're going to give people that alternative to go and basically go earn, you know, whatever it is, risk-free, we'll call it. I mean, nothing's risk-free, but as opposed to being a stock market that's at all-time highs and basically somewhat inflated. Like, so let's face it. So this is not a good sign for the markets, in my opinion. You know, again, it's not everybody's got an opinion, but this is not a good sign, and we need bonds to be strong and rally here to keep the stock market intact. So anyway, that's why I'm watching it. That's my kind of spiel. And as I mentioned yesterday, I kind of like the TLT and IEF. I'm not going to get into the exact trades here because I'm looking to wrap this up pretty quick. So that's kind of my thesis. I'm staying at the short end of the curve. I like the IEF. And so you can look at some stuff in that as well. You got the crude oil. That actually continues to be relatively strong, especially since, you know, a couple weeks ago came off these lows down here, and it's actually been a really good run. As well, natural gas yesterday absolutely cranked. The good news is for natural gas is this area down here at this 380 has held really strong. And yesterday we had an absolute gang, but I want to say, I think it was up like 14. It was up some ridiculous amount yesterday. I can't remember the percentage, but it was up huge. So huge bounce in natural gas. As I said, I'm looking for this. I think it's getting a bit toppy here. I think you're going to start seeing it get a little frothy in the mouth. This was kind of where I wanted it to go or was looking for it to go, and it did it all one day. And I'm just going to go into saying this is why you got to be really careful about trading natural gas. I mean, specifically natural gas futures, because it is a fucking monster and it will tear your fucking face off. And I don't care how long you think you've been in the market and how much you think you know, and you were an ex-floor trader and all this fucking shit. It's like, yeah, so when you were an ex-floor trader, your ass was that much closer to the guy fucking you up the ass in this thing. So I don't even want to hear that. Like, there's no bullshitting anybody who knows anything about natural gas. And if they try and tell you they know about natural gas, they are full of fucking shit. So anyway, so be careful. But anyway, this one's worked out. I'm probably gonna be looking to I'm gonna probably lighten my load up on this today. In fact, I'm gonna probably be looking for some new positions. Be looking at those next week. I'm probably not gonna do anything with that this week. Because I do think natural gas does get a bit of pressure up in this area here. You have this big red bar up here. So look for this thing to start to run out of gas. And it does look like with the amount of volume yesterday that we sold off on, it couldn't power through there. This spot right here, which is about 445.93. So, again, I'm not claiming I'm any professional. I'm just trying to trade what I see. I don't really like natural gas here. And although I think if you go and look at natural gas, I do think the volatility in here continues to be elevated. But buyer beware, or I should say seller beware. Natural gas is not, it's not for the lighthearted. All righty. So that is the story with the Henry Hub natty gas. And as I said, there's not really too many. This thing, I hate this thing. I hate it. I can't stand it. This UNG, I don't even know why it's still a product. Enormous amount of volatility. This thing is such a piece of garbage. And it doesn't really, I don't know, in my opinion, it doesn't really trade close enough to natural gas. And I'm surprised that's even a product and it's even still in business. I would have expected it to just go under. They need to come out with a better product. Now, there's a micro natural gas, which I have never traded. I have never traded the micro natural gas. I think the margins on it are still absolutely insane. I think there's two different quotes going on here. Yeah, I think this is the February. I think we're trading February, and it looks like the quote that I'm getting on, it looks like the quotes I'm getting elsewhere are not. Anyway, margins on this are still kind of suck at 638, and that is day trade margin. I believe the actual margin, like the carry, I want to say it's upwards of $3,000. I think it's like 3,000 or 4,000, because the main contract for Natty Gas is like insane, right? It's like 6,000. So that fact that's saying that's the day trade margin. And actually, I think that's the day trade margin too. There is the 63, because I want to say that it's like 23. I think it's like 23 or 24,000 on natural gas on the actually like the margin requirement, which is fucking insanity. That's why you got to be careful, folks. Like, because these nominal values that you get on here. You got to realize, like, you could say, like, oh yeah, well, it's only 600, and then you get this, right, and then you get to the end of the trading day, and then all of a sudden it's going to like beef that margin, because you're going to get off of day trade margin, right, that daily margin, and you're going to get into that carry margin, and that can balloon to whatever this contract, which is like what I think it's like 6. I want to say it's 6. I'm just kind of going off the top of my head. on what it is. I think it's like $6,000. So you're going to go from your margin requirement being $600 to $6,000 as you get to the end of the day on this. If you're going to look to hold it and carry it, and you're going to be like, "What the fuck happened?" And well, that's what the fuck happened. And so just be aware. And there's not too many products. I mean, I've looked. There was one. I'm trying to remember the name of it. Was it like Burn or something? Or Burn? I don't know. There's a Bloomberg. There's a Bloomberg ETF that I've seen. I've never traded it, but there's a Bloomberg ETF that I know some folks have bought. And I can't remember. My mind's kind of farting on me here. I can't remember. I can't remember what it was. I can't remember. Do I have it in here? I hate to do this because I kind of look feeble when I do this, but I can't remember. I don't know if I put it in my ETF list or not. I don't see it in here. Yeah, I don't see it in here. I can't remember for the life of me what the heck the symbol was. But there's one dude that I traded with for a while when I was doing a Discord. He used to trade it all the time, and he was actually really good at it. He was really good at trading that thing. He traded it a lot. I can't remember the name of it. So if anybody knows, I guess nobody's watching anyway, but anybody knows, give me a holler and let me know. I can't think of it off the top of my head. So anyway, natural gas, natural gas, really big move, giving some back today. And that's the story there. So I think going into today that best bet is just don't do anything today. There's no volume. I mean, look, I always gauge like activity in the market by what goes on in the ES, regardless of what else might be going on. Gold could be up, 100. Silver could be up 50. It doesn't matter, whatever the commodity is. I gauge everything on the ES. If there's volume in the ES, it usually translates into there's volume everywhere. And the last 2 days, like even yesterday, we did not even get close to 1 million cars. I think we did like maybe 700,000. You can go look it up, but I know we didn't go over 1 million. And we are at 50,000 cars, which is just anemic. That is anemic. Normally at this time of the day and this time of the morning, 45 minutes before the open, we are usually at or near about 200 to 250. Maybe more. And if it's going to be an active day, and if it was a bit active overnight, we're near 500,000. So just be aware of that. And there's just nothing going on. And that is really all I have to say. There's no economic activity. And then last but not least, we're going to talk about Bitcoin. I'm going to continue my thesis of being short on Bitcoin and piss off the Bitcoin bros and gals, and because look, there's not much fundamentally that's not known about Bitcoin at this point. Let's face it, it's, I think, progressed to a point where it's a product where just because you were a Bitcoin bro or gal since 2017 or whatever, 2015, before everybody else kind of caught on to it, there's no more secrets, folks. There's no more secrets to what's going on with it. Don't let those people fool you. The only thing they're doing right now is just struggling for their own survival to make themselves significant, because you have this group of people out there that claim to be in this space, and they are paid to do what they do. They've made an enormous amount of money doing what they do, but the well has dried up to the point where, you're just not bamboozling anybody. You're not convincing anybody that you're a fucking expert anymore. Because quite honestly, anything that needs to be out about it is out. The news cycles and the information now is available to everybody. I don't need you as a crypto gal or bro to tell me what's going on with this market, or it's some kind of inside take and all this other bullshit. And the genie's out of the bottle, and I think that's part of a lot of what's going on with this as well, because now you used to be able to go and get these crypto people out on social media, and just a few years ago, maybe even a year or two ago, and you would get them out and they would all pump something. So one of these shitbag, half-ass coins somewhere, whatever it was. XRP, I'll use that one as an example because that one was an easy one. And then they would all be out pounding the table on it. Yeah, XRP, Citibank's going to use their blah, blah, and they're going to do it to clear money and all. So it's like, shut up. And then it turned out that nothing happened. It went up, and it turned out to be a big pump and dump. You had all these poor bastards go in there, and it was nothing more than like a penny stock scheme. And I compare it to a penny stock scheme. I don't mean it was like a scam and the fact that the company didn't exist, but it was a penny stock scheme in that you got caught in a pump and dump by a bunch of influencers who were paid to go and pump this, whatever it was. And I just use XRP because that one's just one that's in my head still that I remember, people pounding the table. And look, it's up a lot since those times, but the days of being able to move things, it's gone, folks. Those people are not even significant anymore. They're a flea on the back of the dog. And so I think that has a lot to do with why crypto really can't muster that enthusiasm and momentum right now. There's just no real catalyst. And I'm going to continue to be bearish, and I don't think I'm alone. I've been saying I'm kind of looking for this thing under 80K. My sweet spot would no doubt be around 75. And I'm going to continue to be short. And this is really the only one that I watch. And the way I'm going to be short Bitcoin is I'm going to use MSTR. That's how I'm going to use it. This has been the easiest way to short Bitcoin, only because this has been the easiest way because it's not only liquid, it's very accessible. As a trading vehicle, it's to me, it's very, very easy to just go and buy puts on strategy and kind of play it that way and not have to use a ton of money. Now, there probably are a bunch other ways, but to me, this one's right in the wheelhouse. It's got all the characteristics of what I look for, in a surrogate, so to speak, in that it has good liquidity, it's got good volume, there's tons of options in it, and it's paid off. Right? I mean, you look here, they have weeklies. Volume in here is actually really good on a lot of these. You just go out to March. Decent amount. Look, it's not great, but decent amount of open interest, right, on both sides. And these options are relatively liquid. I mean, you can see here's a near the money kind of spread, and this, they're not horrible. They're not great. I'm not going to say, oh, they're great, but they're not horrible either, as far as the spreads and whatnot. So that's what I found be easy way to short Bitcoin. And as you see, I have nothing right now in here. I'm waiting for a little bit of a rally. I would like to see a little bit of a rally in Bitcoin before I get short again. And I kind of missed the boat. Was it yesterday? Was it yesterday or the day before? I think it was yesterday. I think it was yesterday. It was yesterday that we, yeah, actually, no, it was the day before where we rallied up to about 90K, and I missed the boat. That was my opportunity. So now I got to wait because I don't think shorting here really pays. But I would like to see another little bump in here. I'd like to see this get up to maybe 160. 160, 162 or so. And then I'll reload. All right, and that is about it. And then, going back to the other markets. Bleh. Right, so that's it. That's all I got. It's 8, almost 9 o'clock. Have a Merry Christmas. And I will be back I'm probably not going to be back Friday. I'll probably be back next week. So even though I think we are open Friday, I may not be around. So have a good Christmas.